Let's talk about what's really happening. Not the headlines, not the fear, not the AI will steal your job panic. I'm talking about the structural shift happening inside the highest value sectors of the global economy. Because AI isn't starting at the bottom, it's automating the top. And that changes everything. For decades, the most protected careers were knowledge careers, software engineers, corporate lawyers, marketing strategists. These were high-income, high-barrier professions. You needed years of training to even get in the room. Now, the room has new tools in it. Take software development. Models built by companies like OpenAI and Anthropic can generate structured, production-level code in seconds. Entire functions, debugging, documentation, refactoring. Developers aren't writing every line anymore. They're directing systems. And here's where it gets interesting. One AI-augmented engineer can now produce what used to require 3 or 4 people. Not because humans got smarter overnight, but because the leverage changed. This is what I call the efficiency paradox. When output becomes easier, production explodes. When production explodes, competition increases. When competition increases, only the most strategic players win. So companies aren't hiring armies of junior developers anymore. They're hiring fewer people who understand how to architect AI-driven workflows. The skill isn't typing code. The skill is commanding intelligence. Now let's move to law. For decades, law firms operated on billable hours, research, contract review, regulatory analysis. These were high-margin tasks that took time, and time was billable. Today, AI systems can scan thousands of pages of legal documents in minutes. They flag inconsistencies, compare clauses, identify risk exposure. That doesn't eliminate lawyers. It eliminates friction. 5 associates reviewing contracts for 40 hours? Now it's 1 attorney with AI support doing it in 5. That changes pricing models. That changes hiring structures. That changes profit margins. Again, more efficiency, less labor, same or higher output. And then there's marketing. This might be where the shift is moving fastest. Ad copy, email campaigns, video scripts, SEO strategies, social media content calendars. Tasks that once required creative teams can now be generated, tested, and optimized in hours. But here's the catch. When content becomes easier to produce, volume explodes. When volume explodes, noise increases. When noise increases, strategy becomes king. That's the efficiency paradox again. Lower cost per unit, higher importance of positioning. AI doesn't remove competition. It intensifies it. And this is the macro shift most people are missing. This isn't about mass unemployment. It's about leverage. AI compresses the time between idea and execution. The bottleneck is no longer labor. It's judgment. It's distribution. It's insight. The winners in this new economy won't just be coders, lawyers, or marketers. They'll be what I call AI architects. People who understand how to combine human decision-making with machine execution. And when that mindset spreads across industries, across the US, Europe, Asia, productivity spikes. Capital reallocates. Entire business models restructure. That's how economies change. Not with explosions, but with silent efficiency. And when the map of global money shifts, the biggest rewards go to the people who saw it early. Now, let's talk about how you can actually position yourself on the profitable side of this shift. Now, let's get practical. You've seen the macro shift. You understand the efficiency paradox. The real question is, how do you personally monetize this? The first path is what I call AI arbitrage. And this is where things get interesting. Because you don't need venture capital, and you don't need to build the next Silicon Valley unicorn. You just need leverage. Here's the idea. Arbitrage in finance means exploiting price differences in different markets. AI arbitrage means exploiting the gap between what clients think work costs and how cheaply you can now produce it using AI. Let's take copywriting. Businesses pay thousands of dollars for sales pages, email funnels, ad campaigns. Traditionally, that required hours of research, drafting, revisions. Today, tools powered by OpenAI can generate structured drafts, headlines, angles, and variations in minutes. Does that mean you just press a button and send it to the client? No. That's amateur behavior. The real opportunity is this. You use AI to produce version 1 in 10% of the time. Then you refine, reposition, optimize. You become the strategist, the editor, the quality filter. The client still pays for the outcome. You just change the cost structure. Now let's talk SEO. Local businesses, e-commerce brands, SaaS startups, they all need blog content, keyword research meta descriptions, internal linking strategies. With AI, you can analyze competitor pages, generate content outlines, draft optimized articles, and repurpose content across platforms in hours instead of days. That's AI arbitrage. You're not selling AI. You're selling speed and results. Video editing? Same story. You can use AI tools to generate scripts, cut long-form videos into short-form clips, create captions, optimize titles, and even test thumbnails. Instead of hiring a team of editors, a creator can hire you. Instead of spending 20 hours per client per week, you spend 5. That margin difference? That's profit. And here's the key insight most people miss. AI doesn't eliminate agencies. It compresses them. The new agency model is lean. 1 or 2 operators. High leverage. High margin. Remote. You're not competing on price. You're competing on execution speed and strategic clarity. Remember the efficiency paradox? When production becomes easier, volume explodes. That means more creators, more brands, more startups, more people trying to win attention. They all need services, but they don't all know how to use AI effectively. That gap between tool access and tool mastery is your opportunity. And here's the part that should really grab your attention. You don't need to be a world-class expert in copywriting, SEO, or editing to start. You need to be better than your client and better at prompting than your competition. AI arbitrage is not about pretending the machine does everything. It's about stacking systems. Research faster, draft faster, test faster, deliver faster, charge for outcomes. And if you build retainers instead of one-off projects, now you've built recurring income. This is the lowest barrier entry point into monetizing the AI economy right now. No coding required. No massive upfront capital. Just positioning, execution, and speed. In the next section, I'm going to show you something even more scalable, where you stop selling hours entirely and start building digital assets powered by AI. Now we move from selling services to building assets. Because AI arbitrage is powerful, but you're still trading time for money. Micro-SaaS, software as a service, is different. This is where you build something once and get paid over and over again. Let me explain. A Micro-SaaS is a small, highly focused software product that solves one specific problem for one specific audience. Not a giant platform. Not the next Silicon Valley moonshot. Just a clean, targeted solution. And AI just made this model dramatically more accessible. Before, building software meant hiring developers or being one. High cost, high risk. Today, APIs from companies like OpenAI and Anthropic let you plug advanced AI capabilities directly into simple applications. You don't have to build the intelligence layer from scratch. You rent it. That's the leverage. Here's what this looks like in the real world. Imagine a tool for real estate agents that instantly rewrites property descriptions to optimize for SEO and buyer psychology, or a compliance summary tool for small law firms that simplifies regulatory updates, or a YouTube title optimizer for creators in a specific niche. These aren't billion-dollar ideas. They're $2,000 to $20,000 a month ideas. And that's the point. Micro-SaaS thrives on specificity. Instead of building a generic AI writing app, you build AI proposal generator for freelance designers, AI script enhancer for fitness YouTubers, AI email responder for Shopify store owners. The narrower the problem, the easier the sale. Now let's talk economics. With AI APIs, your cost per request might be cents. You charge users $19, $29, $49 per month. That margin difference? That's scalable leverage. You're essentially packaging intelligence and charging for convenience. And here's where the efficiency paradox shows up again. AI makes building software easier, so more people build. So competition increases, which means the winners won't be the best coders. They'll be the best at identifying underserved niches. The money is not in AI tools. The money is in AI tools for someone specific. The other advantage? Predictable revenue. If you get 200 users paying $29 per month, that's nearly $6,000 recurring. You wake up to revenue notifications. That changes your relationship with work. But let me ground this for you. This isn't passive income fantasy. You still need clear problem validation, basic product thinking, customer feedback loops, simple marketing. The difference is AI lowers the technical barrier. You don't need to train models. You don't need massive infrastructure. You don't need to compete with trillion-dollar tech companies. You build on top of them. That's why I call it investing in leverage without needing millions in capital. And strategically, this model positions you differently. With AI Arbitrage, you're a service provider. With Micro-SaaS, you're an owner. And ownership, especially in a productivity explosion era, is where long-term wealth compounds. In the next section, I'm going to show you the third path. For those who don't want to build or sell at all, but still want exposure to the AI economic boom. Now let's talk about the third path. Maybe you don't want to run an agency. Maybe you don't want to build software. You just want exposure. You want to benefit from the AI boom without being the one writing prompts at 2 a.m. That's where the pickaxes strategy comes in. There's an old lesson from the gold rush. Most miners didn't get rich digging for gold. The people who sold the shovels did. AI is a modern gold rush. But instead of investing in every flashy AI startup promising to revolutionize everything, you look at the infrastructure powering all of them. Because every AI model, every chatbot, every automation tool, every generative video system runs on hardware, and that hardware requires chips. Companies like NVIDIA design the GPUs that power AI training and inference. Their chips are the backbone of modern machine learning. Without them, large-scale AI doesn't function. Then you have semiconductor manufacturers like TSMC, the company that actually fabricates advanced chips for the biggest tech firms in the world. And beyond chips, there's physical infrastructure, data centers, cloud computing facilities, energy grids capable of handling massive compute loads. AI models don't live in a cloud in some abstract sense. They live in buildings filled with servers consuming enormous amounts of electricity. That's where capital is flowing right now. Governments, corporations, venture funds, they're pouring billions into compute capacity. Because here's the truth. You can debate which AI model will win. You can argue about which app will dominate. But they all need compute. That's the strategic layer. Now let's connect this back to the efficiency paradox. As AI becomes more efficient, adoption increases. As adoption increases, demand for compute explodes. More users, more models, more inference calls. That means more chips, more data centers, more energy demand. Instead of trying to pick the next viral AI tool, you position yourself where demand is structural. This isn't day trading hype. This is long-term capital allocation. But let me be clear, this is not financial advice. This is about understanding economic positioning. If AI continues integrating into healthcare, finance, logistics, entertainment, defense, the infrastructure layer compounds in relevance. And the market tends to reward infrastructure providers during technological revolutions. Railroads in the industrial era, oil in the automotive era, semiconductors in the digital era. AI is compute-intensive by nature. So when you think about monetizing AI, don't just think like a freelancer or a founder. Think like an allocator of capital. Where's the bottleneck? Where's the dependency? Where does everyone have to pay tolls? That's where the pickaxes are. And whether you choose to build services, launch Micro-SaaS products, or allocate capital into infrastructure, the underlying theme is the same. Leverage. You either use AI as leverage, you build leverage on top of AI, or you invest in the leverage itself. Now, let's bring this all together and talk about what you should actually do next. If this video shifted how you see AI even a little bit, don't just watch and disappear. Hit the like button. It tells the algorithm this is the kind of conversation people actually care about, not just hype, not just fear, but strategy. Subscribe if you're serious about making money in this new economy. Not next year, not someday. Now, drop a comment and tell me where you're at right now. Are you trying to start a side hustle, build a SaaS, invest smarter, or are you still figuring out how AI fits into your life? And if you know someone who's either terrified of AI or sleeping on it, send them this video. Seriously, be the friend that puts them on early. This shift is happening whether people are ready or not. The only difference will be who moved first. I'll see you in the next one.